Hello everyone, a very good evening to all of you guys. Welcome to the RBI Circular Masterclass. Very good evening everyone. So what the whole idea is, guys, we'll be revising close to 2 months circular in every video. Okay, so this particular session is a free session both for your paid course and for your YouTube as well. Okay, so this particular session will be a free session. You can watch it on YouTube, you can watch it in your paid class as well, right? The next coming sessions will be completely paid, that will be covered in the paid course. Okay, so I'll try to cover definitely the August month and the September month in the masterclass 1. Okay, though I know that September month as of now is not concluded, still whatever the circulars are there in the September month, we'll be trying to complete the same, right? So very good evening to all. Let's start with the discussion. The best part about RBI Circular Masterclass is here you can get an idea like how to cover multiple circulars in less than 2 hours or maybe 2.5 hours, right? So that's the one of the most important thing that you need to know, because just before your examination you have to cover at least 6 to 8 months of circulars, and that becomes quite challenging for you guys as well. That's why we have started this particular series. So let's get the discussion started. Okay, so guys, if you are preparing for RBI Grade B examination, this is our rapid revision batch for your phase 1 examination. You can check the course highlights as well, and you can enroll if you need guidance. Let's start with the RBI circulars related to 2025 first. Okay, first I'll be covering the August 2025 circulars, and then I'll be covering the September 2025 circulars as well. Okay, let's start. So we are having the following circulars here. In August 2025 month, I can say the most important ones will be your related to your check truncation system, right? Related to your non-fund based credit facilities, related to your co-lending arrangement, though we'll be covering each and every circular in this particular video. Let's start with the Reserve Bank of India co-lending arrangements, right? So we have discussed that co means 2, right? Co means 2. So here 2 regulated entities are there and they are offering a loan to particular borrower. So obviously this borrower will be paying interest as well as principal. Interest as well as principal, right? So interest definitely will be shared by both the regulated entities, as well as the respective share of the principal will also be shared by both the regulated entities, right? So Atiti, in this batch particularly, I'll be having a detailed discussion of all the circulars, right? So MCQ batch is completely different, right? Here we'll be having different concept discussion. At the same time, I'll be also telling you guys what can be important from the particular circular, right? So what is the benefit of joining these batches? At a glance, you can have a look, right? Most probably in 3 to 4 lectures, right? Most probably 3 lectures, I'll be covering all the RBI circulars which can be relevant for your examination. Okay. So both the regulated entities will be sharing the interest element, right? Both the regulated entities will be sharing the interest element as well as the principal element. Now 2 regulated entity, that's why we say as co means 2, right? Jointly lend to one borrower and they are sharing the risk as well as the revenue. Now this particular circular will be effective from 1st of January 2026. Important, 1st of January 2026 से वाले circular आपके apply हो जाएंगे, right? So the new CLAs entering after this date, on or after this date, will be definitely required to follow this particular circular. If you are from a if you have already entered into a CLA arrangement just before this due date, you can continue till the expiry, till the start of the new calendar year, 1st of January 2026, right? Now the applicability, it is applicable on the commercial banks, excluding the small finance bank, local area bank and RRB, right? NBFCs, including the housing finance company. Okay, so NBFC is including the housing finance companies, whereas if I talk about commercial bank, it is excluding the small finance bank, excluding the local area bank and excluding the regional rural bank as well. All the All India financial institutions, 5 All India financial institutions are covered in this particular direction, right? However, if there is a case of multiple banking, consortium lending or syndication, this won't be covered. This won't be covered. Multiple banking, Adani Sahab has taken a loan from different banks. Okay, so apologies for the inconvenience. I'm having a sore throat today. Okay. So Adani Sahab has taken loan from different banks. That's what multiple banking is. Consortium lending and syndication means in consortium lending and syndication, there are multiple lenders, right? There are multiple lenders providing finance to a single borrower, right? So here the borrower is only one. However, there are multiple lenders. In co-lending arrangement, there is only two lenders, right? That's what the major difference is. And if I talk about the syndication, there is an appointment of lead banker who will lead the entire loan process, right? He will be leading the entire loan process. Whereas in case of consortium lending, they are sharing the roles and responsibility, right? So that's what the major difference is between syndication versus the consortium, though we need to remember that co means two. That's why only two lenders can participate in this particular arrangement, right? Now, before starting this particular lending, both the lenders need to get into a ex-ante agreement, okay? Both the lenders need to get into a ex-ante agreement. Now, what do you mean by ex-ante agreement? Any idea? Any idea, guys? So ex-ante agreement is nothing but a pre-signed agreement, right? It's a pre-signed agreement between both the regulated entities for sharing the risk and revenue, right? So that's what ex-ante agreement is all about. Please do remember this terminology. So they will be signing a ex-ante agreement. There will be two RE. There will be two regulated entity. One is the originating RE. Second one will be the partner RE. So whosoever is bringing the customer to the table will be the originating RE. And the second one will be the partner RE. Let's suppose the customer is coming via NBFC's platform. So NBFC here will be the originating RE and the HDFC Bank will be the partner RE here, right? Definitely loan can be both secured as well as unsecured, and they both will be sharing the risk as well as the revenue, right? A very simple type of arrangement. We both are giving a loan to a third party, right? Now there will be a minimum share retention as well. Every RE, every regulated entity needs to keep at least 10% of the share of the loan. Okay, at least 10% of the share of the loan they need to keep with each other in their own books so as to maintain the skin in the game, right? We have already discussed this in our RBI circular series as well. Then there will be multiple criteria in the agreement, like borrower selection criteria. We won't be onboarding each and every borrower. There will be a strict selection criteria. What kind of products we'll be offering, right? What kind of loans we are offering. There are several types of loans. What kind of fees we are charging, and different responsibility segregation between the originating RE and the partner RE will also be there, right? What's the best part of the ex-ante agreement is you need to clearly disclose the role of each and every RE, right? And in the borrower agreement as well, you need to clearly disclose the role of each and every regulated entity and also maintain a single point of contact. Let's suppose the borrower is facing any kind of issue. So there is a single point of contact. There should be a single point of contact. It can be NBFC, it can be HDFC Bank as well, right? So any contact can be a single point of contact. Now, if the loan is eligible for priority sector lending, no problem at all. You can take the benefit of that. You can claim the PSL accordingly, right? In accordance with your share. As per the CLA, let's suppose the share of NBFC is 60%, the share of HDFC is 40%, so up to 60% of the loan can be claimed as a PSL here, right? Can be accounted for in the PSL status here, no problem at all. NBFC accounting, any kind of unrealized profit arising out of the CLA arrangement must be deducted from the CET1 capital or the net owned funds until the maturity. So that's even there in the net owned funds criteria, right? Any kind of unrealized profit, you need to eliminate it. So it's there in this particular circular as well. Now both the entities can have different interest rate, right? Let's suppose the NBFC is charging 12%, the HDFC bank is just charging 10%. So depending on their respective share, we'll be calculating a weighted average rate. And that's what the blended interest rate is all about, right? It's nothing but a weighted average rate for each regulated entity. All the charges need to be clearly disclosed in the annual percentage rate here, right? It should be clearly disclosed, and the partner RE should irrevocably commit. The commitment should be completely irrevocable here, right? There should not be any kind of, you cannot walk back from the transaction, you cannot exit the transaction once you have entered. That's what irrevocably commitment means, right? And whatever your share is, let's suppose HDFC bank is having 60% of the share. So please do the accounting of 60% of the share in your books of accounts, not later than 15 days, right? Not later than 15 days, you need to record your share in your respective books of accounts. Then obviously, because there are two parties here, and in order to make proper arrangement, the transactions will be routed via escrow account, right? So there is a requirement of escrow account here. You need to route all the transactions via that escrow account, and you need to keep separate borrower account, right? If let's suppose there are two regulated entity, HDFC bank and NBFC, then both the regulated entities will be maintaining their own share related to the borrower, right? So it's not like that one particular party will be maintaining all the share. They both will be maintaining their own respective share, and that too all the transaction will route via escrow account, right? All the transaction will route via escrow account. What is escrow account? It's a completely separate account, so that any disputes, there is no chance of any dispute, right? So both the regulated entity, HDFC and the NBFC, will make all the transaction in a separate escrow account, right, with the borrower. So all the interest payments, all the principal payments will be routed with this particular escrow account for the complete independence here. Now this can be important. Now who shall report to the credit information company? There was a circular, I think 6 or 8 months back, related to the credit information company as well. So if you are a regulated entity, you have given loan to particular person, you need to report that credit information to the CIC, credit information company. Now each regulated entity here needs to report its own share, right? So both the regulated entities need to report their respective shares. To the credit information company, and that's a compulsion. It's not like that only one company will be reporting both the shares. It's not like that. Okay, both the companies need to separately report it. So please cover the September RBI circular as well. Definitely it will soon be out. Okay, the part 1 will soon be out. I'll be definitely posting it positively on Thursday, right, by Thursday. Now there is a provision of default loss guarantee because originating RE is bringing in this loan, right? There can be a risk in the loan as well. That's why the partner RE needs a DLG. What is DLG? Default loss guarantee. In case of any mishappening, in case of any non-payment, the originating RE need to cover up at least 5% of the outstanding loan, right? So let's suppose NBFC is bringing in this loan, HDFC is also there in this arrangement, and the borrower has defaulted. So NBFC DLG can be invoked here, right? Default loss guarantee can be invoked here, and definitely the partner RE will be getting at least 5% out of it, even in case of loss. This can also be important for your examination. This is related to asset classification. Let's suppose if one regulated entity has classified the loan as SMA or NPA, non-performing asset, right? Then second entity also needs to do the same, because they both are providing the same I can say they are both are following the same prudential norms. Then why there is a need for different classification? So that's why if the regulated entity first has classified the particular loan as NPA, then the second regulated entity also needs to do the same, right? Saran, please download the Oliveboard application, plus please join our Telegram channel link as well. Definitely you will be getting all the PDFs. Okay. Rest of the disclosures and everything you just need to have a quick reading and that's fine, right? Don't cover it in a too detailed manner. I'm talking about the disclosure. Rest of the stuff definitely is important for your examination. Then coming to the statement on development and regulatory policies, right? Statement on development and regulatory policies. So the first aspect is regulation, the second aspect is financial markets here. In the regulation side, we can see that the standard of procedure for settlement of claim in respect of the deposit account of the deceased customer. So now this particular thing, already there is a circular in September 2025. Okay, we'll try to cover it today itself in this particular class. Already there is a circular which is out in September 2025. Coming to the second one can be important for your phase 1, introduction of auto bidding facility. Introduction of auto bidding facility in the RBI Retail Direct for the investment and reinvestment in treasury bill. So now there is a facility. If you are investing in T-bill, treasury bill, there is an auto bidding facility, right? You can just place your auto bid. You can just place your bid, and whenever there is a auction of treasury bill, definitely your auto bid will be activated in this particular platform, which is RBI Retail Direct platform. Okay, this can be important for your examination. Again, we all know that RBI Retail Direct platform is a great platform for the retailers to participate in the government securities market, right? Next one is related to your RBI eases the norms for special rupee Vostro, right? Special rupee account to accelerate the global trade, rupee trade. So this is all about internationalization of your Indian rupee, right? This is all from internationalization of your Indian rupee. So what they have allowed here is they have eliminated the requirement for any kind of prior approval. Earlier, if a bank in India is opening a special rupee Vostro account, right? If a bank in India is opening a special rupee Vostro account, it needs to take a specific permission from the Reserve Bank of India. As of now, there is no permission requirement, right? As of now, RBI has eliminated such kind of permission requirement. You are free to open the special rupee Vostro account, right? What is a special rupee Vostro account? It's nothing but let's suppose if a foreign bank wants to open an account here, that to an INR, that's what special rupee Vostro account is. They can do it without even taking the approval of RBI as of now. This is the key update, right? So this will definitely lead to the internationalization of the INR. This will speed up the operational efficiency as well, right? This will speed up the operational efficiency as well. Okay, so here we can see clearly that they can definitely open the account without seeking for the RBI's approval. Plus, they may invest their rupee surplus. If any rupee surplus is there in the SRV account, special rupee Vostro account, they can invest this particular excess surplus in the central government securities, including the treasury bill, right? So there are two updates. The first update is they can open the SRV account without the RBI intervention. Plus, whatever excess money they are having in such kind of account, they can invest in the central government securities as well, including the T-bills, including the treasury bills, right? So this definitely leads to the internationalization of your INR. Next is your RBI monetary policy update. So what things we need to remember here? First is this was the 56th MPC meeting, right? In August month. This was the 56th MPC meeting. So they have maintained the repo rate at 5.5%. Rest of the rates are SDF 5.25%, MSF 5.75%. So that's what the corridor is all about, right? This is our MSF This is my SDF, 5.25%, and here is my repo rate, 5.5%. This is what the corridor approach is, right? This is the ceiling of the corridor. This is the floor of corridor. And inflation is very well within the range band of 4% plus minus 2%, right? The August month data is also released now. So again, the inflation is very well within the range, right? Apart from this, what I'll advise you guys to please have a look at the GDP projection. The GDP projection for the financial year 2026 is 6.5%, right? 6.5%. So 6.5% is your projection here. Plus, you need to know the inflation projection as well. So your inflation projection here will be 3.1% overall. I'm talking about the financial year 2026, right? 3.1%. Next is introduction of the continuous clearing and settlement on realization in the check truncation system. So what update is there in your check truncation system, guys? What update is there in your check truncation system? A big update is there in your check truncation system. Earlier we used to follow the batch processing system, right? Earlier we used to follow the batch processing system. Now we will be following the continuous clearing system. Continuous clearing system. So earlier when you used to deposit the check, it takes 2 to 3 days to settle that, right? Banks usually process that particular check in 2 to 3 days. Now they are transitioning towards the continuous clearing system. So this will be completely in real time, right? This will be completely in real time or close to real time. So the first phase here is 4th of October 2025. Please do remember this date, 4th of October 2025. So ये आने ही वाली है आपकी 4th of October. Today is 29th of September. The second phase will be in the new year, right? 3rd of January 2026. This will be the phase 2. So आपकी phase 1 के अंदर क्या क्या updates आने वाली है हम वो भी देखेंगे. उससे पहले Akshat, for this you need to connect with the team, right? Please do connect with the team Oliveboard. Definitely they will let you know in case if there is any such kind of information related to a single document. Okay, as of now guys, let's focus on the RBI circular because we are having so much to cover today. Okay, let's be super focused. For operational queries we can always reach out to team. Okay, now before starting this particular circular, would love to tell you about few of the terminologies like what drawer is all about, what drawee is and what payee is. So this is a check. Drawer is the person who writes or signs the check. Let's suppose I am signing this check, so I'll be the drawer. I will be called as the drawer, right? Who is the drawee? The bank on which I have drawn the check. So here it is SBI Bank, right? Here it is SBI Bank. Here it is State Bank of India. So the bank on which the check is drawn. So this is the checkbook of State Bank of India. So it will be the drawee. The State Bank of India will be the drawee, right? I will be the drawer. I am drawing this check. Who will be the payee? The person who will be receiving the money. The person who will be receiving the money, let's suppose Mr. Rahul, he will be the payee. The person in whose favor the check is drawn. The person in whose favor the check is drawn is nothing but the payee. So what check truncation system is all about? Earlier we used to move the check physically. Why? Because let's suppose the check is of SBI Bank, right? Now I am the drawer of this check. Let's suppose I am the drawer of this check. Rahul is the drawee of the check. Sorry, payee is the receiver. So Rahul is the payee as of now. SBI Bank will be the drawee. So what will happen is Rahul is having account in HDFC Bank, let's suppose. So obviously Rahul, after getting this check, will be depositing this check in the HDFC account. What HDFC Bank will do here is, HDFC Bank will be sending this check again to SBI Bank just for cross confirmation, right? Whether this is your check, is this for real, right? This is just a cross verification system which banks are usually following. So we call it as check truncation system. So earlier this check used to physically move in the bank branches. However, now they have started sending the digital images of that check rather than sending the check itself, right? but still there is a lag, there is a time lag, which creates a huge problem, right? Still, in case of outstanding checks, it takes usually 1 to 3 days, right, for the check to get cleared. That's why we have introduced this new system of continuous clearing, right? What is the new system? There is a timeline for each and everything. The very first thing is single presentation session. Now, what do you mean by single presentation session? Now, when Mr. Rahul will place this check in the HDFC bank, this is called as presentation session. Obviously, Mr. Rahul is presenting the check to the HDFC bank, right? So here the presentation timeline will be 10 AM to 4 PM. 10 AM to 4 PM is the presentation timeline. So 10 बजे से लेके 4 बजे तक Rahul can definitely present the check in the HDFC bank. This is the presentation timeline. Bank will be immediately scanning and sending the check to the drawee bank, So HDFC bank will immediately scan this check and send to the drawee bank here, right? Immediately, on a continuous basis. Earlier we used to do this same thing in the batches. Now we are doing it in a continuous basis. So the drawee bank, now SBI bank, what SBI bank needs to do? They need to either confirm that yes, all is well, or they can reject. So what is the confirmation session? This second part is the confirmation session. What is the time of the confirmation session? The time is 10 AM to 7 PM. So 10 AM to 7 PM, SBI bank has to either confirm it or reject it, right? Confirm it or reject it. In case of a positive confirmation, yes, all is well, then no problem at all. The check will be honored. The amount will be deducted from my bank account and will be deposited in the Rahul's bank account. However, in case of a negative confirmation, the check will dishonor. Now, negative confirmation can definitely happen due to n number of reasons. Maybe there is not enough balance. Maybe the sign is mismatching, or is there any kind of, problem with the check, or there can be cases of overwriting as well, right? There can be n number of issues with the check. If SBI bank has not confirmed the check, SBI bank is also not rejecting the check, right? Neither the confirmation nor the rejection is there from SBI bank. It will be deemed approved. If it is not a confirmation, if it is not a rejection, then we'll assume it to be confirmed, right? Time allowed for confirmation. So definitely in the first phase from 4th of October to 2nd of January, the deadline, the timeline will be 7 PM. By 7 PM, you need to confirm it or you need to reject it. If you don't do so, it will be a deemed acceptance. That means the check will definitely pass. The check will be honored. In the phase 2, the timelines are even stricter. The timeline will be transaction plus 3 hours. Transactions plus 3 hours. So let's suppose the HDFC bank has sent the check to the SBI bank for clearing purpose. Then the transaction time will be T plus 3 hours. So let's suppose you are getting the check at 11 AM. So after 3 hours, within 3 hours, what you need to do is you need to either confirm it or to reject it. Now this is a part of phase 2. As of now, phase 1 will be implemented from 4th of October. However, in phase 2, the timelines are even stricter. T plus 3 hours is the timeline. Within 3 hours, you need to either confirm it or reject it. If you don't do so, it will be a deemed approval. Right? I hope everything is clear till now. Any queries? Anyone? Any queries? Anyone? यहां तक क्लियर है सबको? अच्छा, कोई डिस्टर्बेंस आ रहा हो तो अपॉलॉजीज. आई हैव अ सोर थ्रोट टुडे, सो वी नीड टू मैनेज विद दिस वॉइस ओनली. ओके, perfect. Now what is important here? What kind of thing can come in your examination? Definitely we'll be having a discussion regarding that as well. Along with the circular, I'll be marking few of the things that can be important for your examination, right? There will be an hourly settlement. Let's suppose SBI Bank has given a confirmation to the HDFC Bank that all is well, right? Let's suppose SBI Bank has given confirmation to the HDFC Bank that all is well. Then the presenting bank, what is the presenting bank? HDFC Bank is the presenting bank. Must credit the customer account immediately. Then HDFC Bank needs to pay to the Rahul within 1 hour after the settlement. Settlement between SBI Bank and HDFC Bank is over. Yes, it is over. Then pay to Rahul within 1 hour. Pay to Rahul within 1 hour. A strict deadline. A very strict deadline. Okay. What will be the implication? Definitely, it's good to know some of the implications that for customers it's very fruitful, for it's time saving. For banks as well, this will definitely result in a high operational efficiency, strong IT system, and for economy, the payments are efficiently being made. So definitely the payment volume can also increase. So these are the basic implications. What can be important for your examination? Let me just quickly tell you. This is a very crucial circular that you can't ignore. Please do remember the dates and the phases. We are transitioning from batch processing system to continuous clearing system. Please do remember this thing, right? Please understand very well the terms, what drawer is, what drawee is, what payee is. Okay, a basic understanding will also be fine. Is this included in phase 1? Definitely a question can come in phase 1 as well. Okay, a question can come in phase 1 as well in your general awareness section. Okay. Next, please do remember the presentation session. What is your presentation session, right? The drawee bank confirmation session, the fact that it will be treated as deemed approved. If the drawee banks is not confirming or even it is not rejecting, it will be treated as a deemed approval. Okay. So these things will definitely be important, and after the settlement, the presenting bank needs to credit the amount within 1 hour of the settlement, right? So I have mentioned all the key takeaways as well for your examination, so that at a glance you can have a quick understanding of this particular circular. Next one is your quarterly basic statistical return, which is nothing but your BSR1. Okay, so you are asking about the 1 hour time frame, right? 1 hour time frame, definitely it is applicable for both the phases. Okay, it's just that the timelines are changed. Here the drawee bank is having the timeline of 10 to 7, right? Here the drawee bank is having the timeline of 10 to 7, whereas in the phase 2 it will be T plus 3 hours. That's what the major difference is. Okay, that's what the major difference is. Next one is your BSR1 data. What is BSR? Basic, and obviously this will be relevant for your examination. Okay, bank credit growth decelerated to 9.9%. Please do remember the data. 9.9% is the data of June 2025 quarter, right? Earlier we used to have 15% bank credit growth if I talk about year on year basis, but as of now we are having 9.9% growth, right? And personal loan is leading the pack with 12.3%, right? Rest if I talk about the agriculture industry, ये सब personal loan के नीचे हैं, right? So personal loan is having the highest growth rate as of now here. Okay, as we can see in the chart as well. Next, we can see that personal loans continued to grow faster than any other category as of now. Public sector banks record a higher credit growth as compared to the private sector banks. So please do remember, public sector bank is having a higher credit growth as compared to the private sector bank. So this information is also relevant for your examination. Though I have covered each and every pointer in your RBI circular series, still this pointer can be important for your examination. Next is again your BSR2, which is a quarterly report related to the deposits. The BSR 1 was related to the credit. BSR 2 is related to your deposits. Bank deposits with scheduled commercial banks have registered a 11.3% growth rate. So whatever the deposits we are having are growing at 11.3% is what I can say as per the BSR 2. Now this is a bank. You are getting deposits. You are able to grow it at 11.3%. However, whatever credit you are offering, so as per BSR 1, you are able to grow it at 9.9% only, right? And in terms of your credit, your public sector banks are outperforming, right? So here we can see the bank deposit growth as well. So I can say more than majority is related to your term deposit only, right? More than majority of your composition is from term deposit only, then is saving account, and the least one is current account, right? Okay, I just wanted to tell you one point related to public sector and private sector bank. I missed to mark that point actually. Okay, here it is. Have a look. The deposits of the public sector banks and the private sector banks are 10.2% and 12.4% respectively. So can I say that in case of credit, which is BSR 1 data, public sector banks were outperforming the private one. But as per the BSR 2 data, which is related to deposit, private sector banks are outpacing the public sector bank, right? This is the case of deposits. Right? Next again is a very crucial direction, which is non-fund based credit facility of Reserve Bank of India, direction 2025. So we all know fund based facility. What is fund based facility? Let's suppose I am a bank. I have given you a loan of 1 crore rupee. That's a fund based facility. What's a non-fund based facility? Can anyone tell me? What is a non-fund based facility? Any idea, anyone? Non-fund based facility? Look, when a bank is extending guarantees, right? That's what a non-fund based facility is, right? If a bank is giving a guarantee, it's giving a non-fund based credit facility. Yes, Akshat, very good. So it's not always about lending money. Sometimes it's about extending the non-fund based facility as well, and this is a consolidated direction. I will say one of the most important direction for your examination, right? Very, very important. Okay. So some of the examples of non-fund based credit facilities will be definitely your bank guarantees, your letter of credit, co-acceptance of bill, and so on. Here the bank is actually not directly not giving the cash or loans, but promising to pay in case the customer default. Let's suppose I am a customer of HDFC Bank. Now HDFC Bank on my behalf is giving a guarantee. Can I say that HDFC Bank has extended a non-fund based facility? Yes, HDFC Bank has extended a non-fund based facility for me, right? Now this direction apply on commercial banks including RRB and LAB. Please do remember when we talk about the co-lending arrangement, right? Co-lending arrangement. It was scheduled commercial banks minus RRB minus LAB, right? Minus SFB also, small finance bank also. Here it is commercial bank plus RRB plus LAB. Primary urban cooperative banks and central state urban cooperative banks are also included. All India financial institutions are also there, right? NBFCs and HFCs, but of middle layer and above, not of lower level, right? Look, the bank, if I don't have the adequate balance, I will say, right, then only the guarantee will be invoked, right? In that case, only the bank needs to pay the money, right? Plus, there is as of now no case of NPA because bank has extended me a non-fund based facility. Okay, and definitely I'll be talking about the NPA related stuff as well. Please wait for around 5 to 10 minutes. When the respective section comes, I'll definitely talk about the NPA related criteria as well. Okay. So NPA is once the guarantee is invoked. Once the guarantee is invoked, it becomes a fund based facility, right? Because now I need to compensate HDFC Bank. So definitely we'll be discussing this case as well in the concerned section. So guys, it is applicable from 1st of April 2026. That's the effective date. 1st of April 2026 is the effective date. Now there is a concept of partial credit enhancement. Do you guys know what partial credit enhancement is? Any idea? What is partial credit enhancement? Anyone? Look, I want to issue my bonds. I have a corporate entity, I have a company, I want to issue the bonds. The problem is nobody is trusting my bonds. Whether do I have enough repayment capacity or not. So what I can do is, I can go to a bank and ask for a partial credit enhancement. That means back my bond with your guarantee. I request the bank to back my bond with their guarantee. If I am unable to pay the money to my bondholders regarding the principal repayment, regarding the interest repayment, the bank will take the responsibility of paying them up to a partial amount, up to a certain amount, right? That's why the name is partial credit guarantee, not full credit guarantee, because the bank will only be undertaking a partial liability here as a guarantee, right? So as a guarantee, the bank will be only undertaking a partial liability for me, right? So what are the eligible regulated entities? Scheduled commercial banks excluding RRB, AIFI, NBFC and HFCs, middle layer and above are only eligible. Who can get the PCE? Important. Corporates can get the partial credit enhancement. The special purpose vehicles can get it. Large NBFCs and HFCs, that to 1000 crore plus asset size, or even the municipal corporations can get the partial credit enhancement. That means if these entities are issuing the bond, right, or debenture, they can definitely take the partial credit enhancement. You need to fall in this criteria in order to be eligible for the partial credit enhancement. That's what the meaning is, right? So as I told you, it's a subordinated facility. It's an irrevocable line of credit. That means the bank needs to honor the obligation. If I am facing a shortfall in the cash flow, if I am not able to deliver my obligation related to my bond, related to the repayment of my bond, then bank will be definitely doing so, right? So again, it's a part of guarantee only. That's why we are studying it here. So, sir, why you told about the partial credit enhancement? Because there are certain limits which are applicable in this particular circular. I'll discuss it in few minutes. Okay. But first I need to just have you guys a quick understanding of what partial credit enhancement is. Okay. Now, who is a beneficiary? There are some definitions. We'll be having a quick look related to that related to the key definitions in this particular circular. Who are the beneficiaries? Person or organization in whose favor the NFB facility is issued. HDFC Bank is issuing a credit facility in favor of Prateek, then I will be the beneficiary, right? It can be a bank guarantee, it can be a credit facility, no worries at all, I'll be a beneficiary. Co-acceptance of a bill. Here bank is promising the seller, if the buyer is not able to meet the obligation, the bank is promising the seller. That's what co-acceptance of bill is all about. It's nothing but a promise, it's nothing but a guarantee only, right? Then the guarantor, the bank that is giving the guarantee will be called as the guarantor, definitely. The obligor, the person whose obligation is being backed up by the NFB facility. If I am the person, my obligation is being backed by a HDFC Bank, so I am the obligor here. What are some of the terms and conditions that you need to follow as per this facility? Good evening, Madhur. As a regulated entity, I need to have a credit policy. First, what I need to have is a credit policy. In my credit policy, each and everything should be defined, that what type of NFB facilities I am offering, right? Because I am a regulated entity. So if I am giving any kind of credit facility, I need to clearly define it. What kind of facilities I do give? What are the limits? What are the security? Any kind of fraud prevention techniques I have placed, right? NFB important. NFB is only given to customers who are already having fund-based facility, right? The non-fund-based facility will be only given to those customers who have already having a fund-based facility, right? If I am having a fund-based facility with HDFC Bank, then only HDFC Bank is interested in giving me the NFB. Sir, I cleared IBPO, okay, IBPS PO recently. Should I watch your class for CA mains? Yes, if you do have circulars in that, then definitely you can watch it, okay? If you have circulars, RBI circulars in that particular exam, you can watch it, okay? So definitely if you do have any kind of fund-based facility with any bank, then only they will be offering you the non-fund-based facility. Just give me a second, guys. देखो यार राहुल मधुर, मैं आपको बता देता हूँ, ये आरबीआई सर्कुलर का क्लास हो रहा है. अगर आपके एग्जाम के अंदर आरबीआई सर्कुलर आ रहा है तो डेफिनेटली आप देख सकते हो, कोई भी एग्जाम हो, डजंट मैटर, ठीक है. पहली क्वेरी. दूसरी क्वेरी, ये सफिशिएंट हो गया क्या, होगा क्या? डेफिनेटली ये सफिशिएंट होगा, राइट. यहाँ पे मैं 99% नहीं, एक्सक्लूसिव 100% कवरेज कर रहा हूँ आपके आरबीआई सर्कुलर्स का, ओके. सो अगर आपके आरबीआई सर्कुलर्स किसी भी कोर्स में आ रहे हैं तो आप ये वाला लेक्चर देख सकते हो, ठीक है. कंप्लीट कवरेज होगा, सफिशिएंट होगा, ठीक है. आरबीआई वालों के लिए सफिशिएंट हो रहा है तो डेफिनेटली आपके लिए भी सफिशिएंट ही होगा, ओके. सो yes Rahul, recently added in syllabus, so definitely you can watch these circular videos, okay. Now let's suppose I don't have a fund based facility, so I won't be getting a non-fund based facility as well. Yes, but there are certain exceptions. And here are the exceptions, like derivative contracts, like partial credit enhancement, right? There are few of the general points here in this. There are 6 pointers. Just have a quick reading. The most important one will be the derivative contract and the partial credit enhancement here, right? In these cases, even if I don't have a fund based facility, then also I can take a non-fund based facility in case of derivative contract, in case of partial credit enhancement, right? NFB, non-fund based facility, cannot assure repayment of deposits or bond unless RBI specifically allows it. You cannot give a non-fund based facility. If that too on a repayment of deposits or bond, unless you are specifically taken the RBI permission, the RBI has specifically allowed it, then only you can assure such kind of repayment, right? Now this point is important, and I think Akshat has asked this particular doubt. If NFB turns into a fund-based facility, how a NFB can turn into a fund-based facility? That's the question number 1. Let's suppose HDFC Bank has given a guarantee on my behalf. The guarantee was invoked, unfortunately. Now HDFC Bank needs to pay the amount to the concerned party, to whomsoever it has given the guarantee. So HDFC Bank को payment करना पड़ गया. HDFC Bank is now required to make the payment. Now it has become a fund-based facility. definitely the bank will try to recover this money from me. So now it is a fund based facility, so normal loan classification rule will apply. Okay, so the NPA norms जो हमारे normal prudential norms में रहते हैं, that will apply. Okay अक्षत, so in case ये NPA मैं अगर नहीं पे कर पा रहा हूँ, if I am not able to pay that money, then definitely the NPA loan classification will also apply, right? Now these are some of the features of the guarantee. It should be irrevocable, it should be unconditional, it should be clear and enforceable in the court of law. There should not be any kind of condition attached to the guarantee. Now the most important point for your examination can be these internal limits from this particular circular. Internal limits required especially for the unsecured guarantee. If your guarantee is unsecured, then internal limits are also there. The very first thing, if you are a small bank, let's suppose if you are a UCB, if you are a RRB, if you are a local area bank, STCBs, CCBs, your total guarantee should not cross 5% of the total assets. Whatever your total assets are, the total guarantee you are giving should not cross 5%, right? That's the first point. Out of which unsecured guarantee should not cross 1.25% of the total assets. Important, right? This particular thing is very, very important. And you must comply with this particular provision by 1st of April 2027. So 1st of April 2027 से you need to comply with this particular provision. Exam के अंदर ये directly आ सकता है, ठीक है? Definitely it can come in your examination. Most of the times they are asking you limit based questions only, right? So total guarantees, if you are falling in these criteria, your total guarantees will be limited to 5%, out of which unsecured guarantee will be 1.25%. And you need to comply this with 1st of April 2025, by 1st of April 2025, right? Sorry, 2027, by mistake I मैंने 2025 बोल दिया, it's 2027, right? And in the meanwhile I have pasted some of the circulars as well, screenshots as well related to these circulars, so later on you can have a quick look at as well. Each and everything that I am discussing is already there in your circular. I have highlighted them as well. Okay, so कितने लोग होता है सर सर्कुलर से भी एक बार देखना है तो आपका 2 बार टाइम खराब नहीं होगा. You don't have to waste so much of time reading the circular again. What you can do is you can read the same PDF again, just the highlighted points. Okay, so definitely it will save your time. Then there are few more things in this particular circular. I will say this particular circular is too huge, right? It's big. So what you can do is just cover it in a crisp manner. The things that I'm telling you here will be very, very relevant. I can say they are the most exam oriented things that I'm telling you, right? I've already filtered this particular circular, so even if you are able to cover this much, it will be very sorted for your examination purpose. Electronic guarantee. If you are giving any kind of electronic guarantee, then you need to have a strict standard operating procedure. What is standard operating procedure? It's nothing but how things function in an organization, right? So have strict rules. If you are giving electronic guarantee, it's not like that it's not permitted, it is permitted, but you need to follow the strict SOPs. Guarantees to the other bank. Normally this is not allowed. Normally this is not allowed. Do not provide guarantee to another RE, but in case of a trade related transaction, you can do so, right? So regulated entities like bank or financial institution should not normally give a guarantee to another bank or RE. So HDFC bank should not give a guarantee to SBI bank that this particular person will pay the money. This should not be the usual case, but it is allowed if this is a trade related transaction. What if this is a importer and exporter transaction? Then both the banks will definitely enter into a LC arrangement. So that's fine. It's completely based out of a trade transaction, that's fine. But in generally, एक दूसरे को regulated entities guarantee नहीं देंगी third party के behalf पे, right? Timely payment rule. If the guarantee is invoked, you need to pay it timely. You need to pay it timely. Co-acceptance. Now only genuine trade bills will be allowed here. Only genuine trade bills will be allowed here. Now there is a concept of bill of exchange. Let's suppose there is a seller, there is a buyer to pay after 3 months, but the seller wants the money right now. So what the seller can do is, it can draw a bill on the buyer. The buyer will sign this bill. Now this bill can be discounted with any bank. The bank will be paying immediate liquidity to the seller on the basis of bill, and after 3 months, bank will be collecting the money from the buyer. This is a genuine trade bill. Why? Because actually the seller has sold goods and services to the buyer. Genuine trade bill. What if it is a dummy transaction? What if it is a dummy transaction? By dummy transaction, I mean that there is no seller, there is no buyer. Me and my friend, what we did is, I have just drawn a bill on my friend. My friend signed it, and now we are going to the bank for this discounting. We just need immediate liquidity. That's why we did this particular transaction. This is called as accommodative bill. We just wanted to raise some quick finance. There was no actual supply of goods or services, right? I never supplied goods and services. So I can say that this is not a genuine trade bill. There was no trading at all. It's just for accommodation, right? This is just for accommodative. We call it accommodative bill, right? So only genuine trade bills are allowed here. In case of co-acceptance, the bank will be co-accepting the bill. The bank will be giving guarantee. If the buyer defaults, I will be paying the money, right? The bank is saying, if the buyer defaults, I will be paying the money. It's only the case of genuine trade bills and never accommodative bills, right? And never accommodative bills. Okay. Yeah. There is a limit of partial credit enhancement as well. Please do remember this particular limit. I have already discussed the concept of partial credit enhancement. This is the limit. In case you are a single regulated entity, the maximum amount that you can give as a partial credit enhancement is 50% of the bond issue size. Let's suppose the bond issue size is 1000 crore. Then maximum up to 5000 crore, you can give a partial credit enhancement. If it's a combined RE, multiple REs are coming together and giving a guarantee, still the limit will remain the same, only 50% of the bond issue size. That's it. Can be very, very important for your upcoming examination, right? Acha, bonds must be having a minimum BBB rating, at least minimum BBB rating should be there. That too from 2 credit rating agencies here. Please do remember this limit, can be very, very important for the examination, right? Partial credit enhancement. Exposure limits. Partial credit enhancement to any kind of NBFC or HFCs should be less than equal to 1% of the RE's capital fund. Please do remember this one as well. I have covered this in your RBI circular video as well, right? The PCE to NBFC or HFC, if you are giving any partial credit enhancement to any NBFC or the HFC, whatever your capital fund is, you can go maximum up to 1% of your capital fund. That's it, right? And definitely any kind of PCE must be repaid by the person. Let's suppose a company PC I have given, I am a bank, I am a regulated entity, I have given a partial credit enhancement for a particular company. It got matured, I need to pay the bondholders. Then in that case, that particular company will be repaying me within 30 days. If it goes above 90 days, that will be a NPA, that will be a non-performing asset, right? Yeah. So guys, it's a big circular is what I can say. What are the most important things that you guys can cover in this particular thing is, what are the non-credit, what are the non-fund based facility, right? The examples of it. Then the applicability criteria, very, very important. The effective date, right? The concept of partial credit enhancement. Now I can say there is 50% of the chance that the question can come from this particular area of partial credit enhancement, the percentage that I just discussed with you. right? This one, limit of the partial credit enhancement, very, very important for your examination, right? Otherwise, it's a very big circular. If you directly read the circular, I will say that you won't be able to complete it just before the examination. That's why we need to cover it in a very crisp manner, right? And that's what the aim is of this particular lecture. Next one is the regulatory sandbox, fifth cohort on theme neutral. So in August month, there was a regulatory sandbox, right? Fifth cohort was there on theme neutral. It was a exit related news. So the RBI has found the particular entity viable. What is the name of the entity? Indian Bank Digital Infrastructure Company. Indian Bank Digital Infrastructure Company. It's working on the blockchain based solution for financing, for financial solutions related to MSME. Okay. So just a quick understanding of what is the recent theme of the cohort, what is the number of the cohort that is recently concluded, that got recently concluded, plus the sandbox entity name and the quick understanding of what this sandbox entity used to do. Then next one is your performance of private corporate business sector during Q1 of financial year 2026, right? This is the private sector, private corporate business performance data, right? So please do remember from this particular data, what you need to remember is sales of the listed private non-financial company has increased by 5.5%, that too year on year basis. And if you have a look at the different sectors, then the service sector, which is non-IT one, is having the highest sales growth, 7.5%, as compared to other categories of manufacturing and IT services. The non-IT services was growing quite good as per the published data, right? Otherwise, there is too much of data in it. I will say you guys to just remember the majority of the things that I am telling you. Just give me a second. Okay. Have a look at the operating margin. We can see that again, the non-IT services is leading the pack in case of the operating profit margin as well, both in terms of sales and in terms of operating margin, right? Then there were some amendments in your KYC related directions. Okay, so they have just added some of the liners, paraliners related to your Aadhaar based authentication related to the person with the physical disability and so on, right? Not a major update. If I talk about the September 2025 data related to your RBI circular, we are having this much to cover as of now. The last published circular was on 26th of September, though the month is still not concluded. We can have some updates maybe today or maybe tomorrow, right? Till 30th of September. Still I am taking the major circulars as of now. Okay, let's start. Starting with the regulation of payment, again the most important things. This is regarding the regulation of the payment aggregator. So we are having so many payment aggregators in India, and this guidelines states how to regulate them as a whole, right? How we can regulate them as a whole. Effective date immediately. It is applicable from immediate effect as of now. To all the banks, to all the non-banks who are doing the payment aggregator business, authorized dealer banks and scheduled commercial banks engaging with the payment aggregators, entities here needs to comply with this particular direction, right? There are few terminologies that you need to know, like what do you mean by payment aggregator? So it's nothing but an entity who is collecting payments on behalf of a merchant, right? So let's suppose there is a particular merchant. There is a payment aggregator who is collecting different payments. Let's suppose this is the business. In between there is a need of this payment aggregator. Now there are so many customers who wants to transact with this particular merchant. They need a payment aggregator in between. Right? Why? Because who will be reconciling so many customers? So that's why we have different payment aggregators. Like we do have payment aggregator physical. That means the device and the instrument is in proximity. That means the device, the POS device and the card, let's suppose your debit card or maybe your credit card, they are in close proximity. That's a case of payment aggregator physical. Then we do have payment aggregator online. So the device and the instrument are not in close proximity. Let's suppose I am making a e-commerce transaction, right? I'm making a e-commerce transaction. So the device and the instrument, I'm making that payment with the help of my credit card, but this time I won't be swiping this credit card. I'm making an online payment to the e-commerce platform. That will be the payment aggregator online. Then we have the PA cross-border. So this payment aggregator cross-border, what they are doing is they are just handling the inward and the outward foreign exchange. Why? Because they are operating cross-border, right? So they might be getting money. They need to send the money foreign exchange out as well. So that's why they are operating as a cross-border platform, and payment gateways, they are just giving tech infrastructure. They are not at all handling the funds. They are just giving a tech infrastructure here, right? Then what is the authorization part? The banks do not require any kind of authorization for carrying the payment aggregator business. No need to take any kind of authorization. If you are a bank, you can carry the payment aggregator business. If you are a non-bank, then you need to apply via RBI Prava portal. First, what you need to do is, if you are a non-bank entity, you need to take NOC, no objection certificate from the regulator. Once you have received it, you can apply to the RBI via that Prava portal within 45 days, right? Please do remember this one. Okay. So what are the timelines basically? So entities doing the payment aggregator physical only needs to apply the same by 31st December 2025, right? If you are an entity who is a payment aggregator physical, then you need to apply it by 31st December 2025 and you need to wind up by 28th February 2026 if not applied. So that's a compulsion. If you are a non-bank payment aggregator, you need to take that registration. There is no if and but here, right? You need to compulsorily take that. This will be the most important part of this particular circular, capital requirement. Now, what are the capital requirement? 15 crore net worth is required at the time of application. If you want to become a payment aggregator, you need to have at least 15 crore worth of capital, right? Net worth at the time of application. However, it's not a one-time thing. By the end of 3 years, you need to have 25 crore net worth, right? So at the start, it's fine if you are having 15 crore net worth. But as you grow, at the end of 3rd year, you need to have at least 25 crore net worth requirement. Right, this can come in your examination, definitely. This can come in your examination. Now, definitely, when we talk about the net worth, it includes the compulsorily convertible preference shares. Why? Because again, if they are compulsorily convertible, then there is no problem at all. They are going to compulsorily get converted into your equity only. So they are as good as equity only. Now this payment aggregator business needs to have a very strong governance. It should be professionally managed. The promoters and the directors should be meeting the fit and proper criteria as well. So here are some of the disqualifications that the promoters and directors cannot have. They need to meet the fit and proper criteria here. Then payment aggregator aggregate funds only for the contracted merchants. Let's suppose I am a payment aggregator, so I can aggregate the payments only on behalf of the contracted merchants. That means those merchants with whom I have made a contract. I can only aggregate the payments on behalf of the contracted merchants here. Plus a payment aggregator cannot do the marketplace business. I cannot do the marketplace business, that's for sure, right? I cannot do the marketplace business. Why? Because it will be directly a conflict of interest for me. It will be directly a conflict of interest for me. Then there are some general guidelines which is stated here. Now here this guidance, this direction is for a payment aggregator, right? What about payment gateways? They need not follow each and everything. However, PG is not under the scope of this particular direction. Still, they are recommended to follow the baseline direction. At least they can follow the basic directions for the best understanding here, right? What is the difference between the payment aggregator and the payment gateway? I have given here. So later on you can download this PDF and have a quick reading, right? Important. If you are a cross-border payment aggregator, then the maximum transaction limit will be 25 lakh rupee. The maximum per transaction. You cannot go above 25 lakh if I talk about the per transaction limit, right? Plus any kind of inward funds or the outward funds must be maintained separate. So you need to have an inward account, you need to have an outward account separately. Okay, we cannot combine it. We cannot combine it. Then there is some due diligence requirements as well for the payment aggregator. However, if you are a small merchants, that means if your turnover is less than equal to 40 lakhs or exports are not more than 5 lakhs here, so then in that case there will be a simplified due diligence for you guys. And merchants onboarded before 31st December 2025 needs to comply with the KYC norms by 31st December 2026. I don't know whether you guys remember that particular circular related to KYC requirement or not. It was a requirement in that particular circular as well, right? So rest of the things here are more of procedural in nature, right? Though I have mentioned it, still I'll advise you guys to first cover the important pointers rather than going into too much detail of one particular circular. What I'll advise you guys to read at least the important things that I am telling you from each and every circular, right? Because most of the times process oriented things don't come in the examination. That's the sad part about the circular. That's why we need to always filter some of the informations as well, right? Next is related to submission of your CIMS. Now what is CIMS? It's a centralized information management system. Centralized information management system. What is centralized information management system? It's nothing. The Reserve Bank of India has created a single digital platform where they can collect, store, manage, analyze any kind of data coming from the regulatory, coming from the regulated entities and the like banks and NBFCs. So definitely banks and NBFCs are submitting different data. So it's a single digital platform for collecting and analyzing, right? So following the launch of the next generation data warehouse, this is called as next generation data warehouse of RBI, the CIMS, centralized information management system. Please do remember the full form as well, and those who are attending the finance current affairs session definitely will be getting the maximum benefit. I have covered one news related to CIMS as well in my last session on Thursday, right? Now RBI has decided to commence the reporting from the following reports. So internet banking returns and mobile banking returns are being monthly furnished on this particular platform. So that's what a heads up from the RBI side related to this news, right? Next is the participation of standalone primary dealer in non-deliverable rupee derivative market. Non-deliverable rupee derivative market. Now for the understanding this particular terminology, you need to understand the word of derivative, right? What do you mean by derivative? So basic understanding of derivative is highly required. If you have watched the lecture related to derivative that I have posted, it will be very helpful for you guys. Now what is non-deliverable or derivative contracts? So basically they are nothing but a derivative contract only. Mostly the settlement is done here in the foreign currency, not in INR, right? So they are undertaken, mostly used by the offshore entities. Why? Because the actual delivery of INR is not possible, but the foreign investors need to hedge their exposure in the INR. So in order to do hedging in INR, they opt for non-deliverable rupee derivative market. Sir, what is the update here? The update here is, earlier it was only permitted to the standalone primary dealer of authorized category 1. Now standalone primary dealer authorized category 3 is also allowed here, right? They are also eligible to transact in the non-deliverable rupee derivative market, is what we can see. And it's just a quick update, like they have in most of the paras they have added the category 3 as well, is what we can see here, right? That's a quick update. Okay guys, next one, RBI authentication mechanism for digital payment transaction direction 2025. So how we can authenticate a particular transaction? There should be a mechanism for the authentication, because there are so many digital transactions, right? We need an authentication mechanism. So this is nothing but a consolidated authentication mechanism only. This is a complete end-to-end direction related to how to authenticate a transaction. All the digital payment transactions in India require two-factor authentication. Have you guys heard about the 2FA, two-factor authentication? Have you guys ever used this two-factor authentication? Maybe on Gmail, right? You must have used or heard about this particular term on Google when you are logging into your account. Two-factor authentication, right? So it's nothing, the first one can be your password, second one can be your OTP, right? So let's suppose you have entered your password. Now this was the first authentication, right? Another factor will be maybe OTP. So the ecosystem has widely adopted SMS based OTP as the second factor. So let's suppose if I want to log into my Gmail account, so what I'll do, I'll type my email ID, I'll just type my password. That will be the first authentication. The second authentication will, a SMS will come on the registered mobile number and I need to type that particular OTP as well, one time password as well. So can I say that this SMS based OTP was not mandated anywhere, but still, because of the best case scenario, I can say it's already widely adopted here, right? So here we are having a complete direction which states the broad principles like how we can authenticate a particular transaction. In case of any domestic transaction in India, it's mandatory now. In case of certain cross-border transaction which you are doing from cards, again it will be mandatory, right? But only in case of certain transactions. What is the effective date? 1st of April 2026 will be the effective date. From 1st of April 2026 it will be effective. You need to compulsorily follow this. I can say most of the banks are already doing it, right? Almost all the banks are doing it. So this will be applicable for the payment system providers, your regulated bodies that are providing you the payment system, and the payment system participants like banks and non-banks. They are the payment system participants, and those who are giving them the permission for doing the payments, for getting involved in the payment system, they are payment system providers. Covers all the domestic digital payments unless and until it is exempted, right? So the first requirement here is authentication. Like you can enter the ATM pin to withdraw your cash, right? That's what authentication is all about. It's just a verification. Card not present transaction. Let's suppose if the card is not present, right? These are the key definitions. So we all know what authentication is all about, right? If the card is not present, maybe we are doing a online transaction. Card present, that means maybe I'm swiping that card at the merchant shop. Cross-border transaction where different banks are making overseas payments, right? There is an exchange of forex here. What is the principle of authentication that is clearly stated in this particular direction? Minimum 2 factors are now required. So earlier it was not a compulsion, but now minimum 2 factors are required. So every digital transaction need to have at least 2 factors. Plus, one needs to be dynamic. So can I say that if I am logging into my internet banking, the password that I am typing is a static password, it will remain same only, right? Let's suppose I am logging 10 times in a day. The password will always remain the same only, it's static. What will be dynamic is the OTP verification, right? OTP will be dynamic. So what RBI is saying here, you need to have at least 2-factor authentication enabled, and at least one of them should be dynamic. One of it should be dynamic. Right? Then interoperability should be there. Access across the apps, requesters and use cases should be there. The operating environment should be there. Right? You are able to use that particular thing through multiple apps. Right? There should be a risk-based approach. Issuer may apply any kind of extra check for any risky transaction. Let's suppose it's not a regular transaction that I'm making it right now. Maybe I'm transacting with some of the international merchants, right, outside my country. That's not a normal transaction which I usually do, right? So it should trigger a red flag, and the issuer may apply extra checks like the transaction location, user behavior pattern. Maybe for highly risky transaction, you can use the DigiLocker for notification or confirmation, things like that. But there should be a risk-based approach. In case of any risk, the system should automatically trigger a particular kind of additional check because the transaction is not usual here, right? Then this will be the responsibility of the issuer, that you need to make a robust system, that too with integrity, right? And in case of any fraud or losses due to your negligence, due to the issuer's negligence, then in that case, they need to compensate the customer fully. Let's suppose I'm doing an electronic transaction, a e-transaction through a net banking, and let's suppose a loss occurs. Then in that case, the regulated entity is required to compensate me because their system was not adequately having integrity, or I can say robustness, right? Now, in case of a cross-border transaction, definitely the directions are not applicable to the general cross-border transactions. Still, for cross-border transactions, issuer must validate the non-recurring CNP, right? What is CNP here? Card not present. In case of the card not present kind of transaction, that means you are doing it online only. You're not swiping the card. So by 1st of October, you need to validate your non-recurring CNP transactions. You need to register with the bank identification number and adopt a risk-based mechanism. I will say it's more of a process-based circular, right? Most of the times in the examination, those questions are coming from your examination that are having some limits in it, right? So I can say majorly the things that are mentioned in this particular circular is process-oriented and not concept-oriented, right? One thing that you can remember here is this particular principal authentication requirement. This can be definitely important for your exam, right? And risk-based approach, you can add more and more checks if the risk is increasing, if that's an unusual transaction, right? Okay. Then there is one more circular here, investment by the state cooperative banks and the central cooperative banks in shared service entity established by the NABARD. So STCBs and CCBs, central cooperative banks. What is the theme here is, banks are required to maintain a particular ratio which is called as SLR, statutory liquidity ratio. And how do we maintain it? By investing in SLR approved investments, right? It can be anything. It can be cash, it can be gold, it can be any kind of approved government securities. What if you invest in the non-SLR securities as well? So STCBs and CCBs were permitted to invest in the non-SLR investments as well, just like any other regulated entity, right? They are also permitted. However, NABARD here, National Bank of Agriculture and Rural Development, has proposed to create a shared service entity. So what NABARD will be doing here is, they will be creating a shared service entity. Please do remember the full form as well, SSE, shared service entity. What purpose it will play? So it will act as like a joint platform or an entity which will be providing a common services here, right? It will be providing a common services here. So now you STCBs and CCBs can also subscribe to it. What do you mean by subscribe? They can just buy the shares in the SSE, in the shared service entity, right? Now since you are subscribing to the shares of SEC, technically it will be counted as a non-SLR investment only. It will be technically counted as a non-SLR investment only, right? Just give me a second, just give me a second. Just a second, guys. Okay. So what they did is they have just done two major amendments here. First is the permissible investment, right? STCBs and CCBs are now permitted to invest in the share capital of the shared service entity, SSE, right? Set up by the NABARD for both the entities. Plus there is a capping of 5% of the own funds. Whatever your own funds is, you can invest up to maximum 5% of the own funds. So this is important for your examination, right? This particular limit will be important for your examination here, right? So this is a special clearing in the CTS on 3rd of October. We all know that CTS is going to be implemented, right? Continuous processing in CTS is going to be implemented from 4th of October 2025, right? The first batch, the phase 1 of the continuous check truncation system continuous processing is going to be applicable on 4th of October. So that's why it's a special clearing session for 3rd of October, right? Now you don't have to remember this particular timeline. This is just for your 3rd of October 2025. What you need to do is you need to remember the circular that we studied, right? This is a one-time event. Basically, this is a one-time event. Now guys, there is a release of SDQI index for the June 2025 month. I know we have studied the data related to the SDQI, Supervisory Data Quality Index, for March 2025, right? For March 2025 we have studied the data. However, this is for the June 2025 and now this is the recent data which is published recently by the RBI on 24th of September 2025. So this will be relevant for your examination, right? March month won't be relevant as of now. June 2025 month will be relevant. Now what is SDQI? Whatever data the regulated entities are furnishing to the Reserve Bank of India, the Reserve Bank of India is giving a score to that particular data in terms of how accurate the data is, in terms of timeliness, in terms of completeness of that data, in terms of consistency of that data, right? This shows what is the quality of the data given by the regulated entities. What is the recent number? The SDQI score has improved in June 2025 as compared to the March 2025. So this is the quarter 1 data, April, May, June, right? In June 2025, the data has increased as compared to the March 2025. What is the data? Earlier, it used to be for a scheduled commercial bank, it was 89.3. Now it is 89.9. So what you need to remember here is this particular data, 89.9. That's the SDQI score for scheduled commercial banks. Now when I talk about in terms of different areas like accuracy, completeness, timeliness, consistency, completeness, scheduled commercial bank is reporting the highest quality in terms of completeness. We do have a 96.2 ka score in completeness, right? Out of the rest of the factors, we are outperforming, the scheduled commercial banks is outperforming in terms of completeness, right? In terms of completeness. Next, if I talk about the highest SDQI score among the categories, so small finance bank is leading the pack here. Small finance bank is leading the pack here with 90.7 SDQI score among the rest of the categories like public, private and foreign banks. Public and private sector banks, they are at a tie, 90, right? So small finance bank is having the highest data as of now of 90.7. So even if you are able to remember this much, it will be good coverage for your examination. So this score is at different level, like less than 70 is a major concern, between 70 to 80 needs improvement, right? So orange area is being reflected as 70 to 80. So in March 2025 you are having one entity in the 70 to 80 range, but as of now in June 2025 we don't have any entity which is less than 70 or even it is between 70 to 80. We don't have any such entity. We are having all the entities that are between 80 to 90 or maybe more than 90, right? So that's a positive thing for the economy as a whole, I can say. If I talk about the different criteria, then please do remember the June outperformer is completeness, right? All the banks have shared a complete information. 96.2 is the score, right? 96.2 is the score. And this is our SDQI score for June 2025, 89.9. Okay guys. And the last thing for today guys is the WMA limit for Government of India for March 2026. So this is the half year 2 of the financial year 2026. So they have declared a amount of 50,000 crore as of now, right? So WMA means ways and means advances. So RBI is giving definitely this kind of facility to the Government of India in case of temporary cash mismatches. So in case of any kind of cash flow mismatches, the government can use this particular limit. This is of 50,000 crore, right? Definitely the RBI can trigger a fresh flotation of the market loan when the Government of India utilizes 75%. So what is 75% of 50,000? It is 37,500, right? 50,000 ka 35%. Sorry, 50,000 ka 75%. 37,500. So once the Government of India utilizes 75% of the WMA limit, that means 37,500. तो यहाँ पे रिजर्व बैंक ऑफ इंडिया क्या बोल सकते हैं कि आप कोई नया मार्केट लोन ले लो rather than just utilizing the WMA limit, right? Because it's just for cash flow mismatches. Just for the diversification purpose for Government of India, Reserve Bank of India can advise the same. Now this particular thing can come in your examination. 50,000 crore वाली important है और 75% तक का अगर in case utilization हो जाता है, so it can trigger a fresh flotation of the market loans. The RBI can ask the government to take some other loan rather than just utilizing the WMA limit, right? So that's all from my end for today, guys. Rest of the things we'll be covering in the next class, right? So thank you so much for attending, everyone. I hope it's useful for all of you. We have covered, I think, most of the circulars here, almost all the circulars from the August month, and if I talk about the September month, I can say that only one is left, right? Yeah, only one circular is left. Rest we will see that on 29th and 30th September how many more circulars are coming in the September month. So definitely we'll be covering that as well in the RBI circular related videos on YouTube. How many more classes you will take on circular? So total I think there are 3 classes for your circulars. I'll be aiming to cover at least 6 to 7 months of data related to your circular in these 3 classes itself. Okay. Okay guys, thank you so much. See you soon in the next lecture. Bye bye. Take care.